Hey guys, it's Amit. So refinancing your mortgage is all the rage these days. People are rushing out to get their loans refinanced, and the main reason why that's happening is because mortgage rates are so low. So in this video, what I wanted to do was cover off on 5 topic areas. 1, what is refinancing and what are the various options thereof? 2, when should you refinance or when does it make sense to do so? 3, why should you refinance and do so now? 4, how do you go about actually refinancing? And 5, there's various options when you go about refinancing. So we want to talk about what are the various terms involved and what is the most appropriate or suitable choice for you. So this is a personal finance channel. We're focusing on helping you make better financial decisions. So without further ado, let's get cracking. What is refinancing? So there's really 3 different types of refinancing, okay? There's an interest rate refinancing, there's term refinancing, and the third thing is there's cash out refinances as well. So let's talk briefly about those 3. So the one that's really prevalent in the market right now is the interest rate refinancing. People are doing interest rate refinances because the interest rates are so low. So if you had previously a 4 or even a 5% mortgage rate on like a 30-year term loan or a 15-year term loan or whatever it might be, right? Interest rates are now in the low 2% range. So when you have that significant disparity between 4% and 2%, it makes a lot of sense to go ahead and refinance at a lower interest rate. When you have a lower interest rate loan, you basically pay less and more of your payments are basically applied to principal. The second type of refinance is the term loan refinance. Now, we're not a big advocate for this, right? But what term loan basically does is it adjusts the duration of your loan. So, for example, if you had a 30-year loan and now you've paid about 10 years of it, so now you're, in all intents and purposes, a 20-year loan, what you can do is go out and extend that term back out to 30 years, and that's what basically a term loan refinance is. The third thing under refinances is the cash out refinance. So the cash out refinance, if you've heard the term leverage, that's what it really is, okay? So what you do is you take a portion or the equity portion of your home, right? So you have a loan, you've paid out a certain amount of principal, right? That amount that you've paid off is actually the equity, right? So you've built equity in the home as you keep making payments towards your mortgage. So you can basically borrow on that equity on your home, right? And then you can utilize it for a different purpose. So if you can utilize it if you wanted to, for example, to buy a rental property, right? So a lot of people do that. They do a cash out refinance so they can basically borrow on the equity of their existing home and utilize it as a down payment towards their next property, which they may rent out and create another source of income, right? So that's what essentially a cash out refinance is. It is a form of leverage, okay? So when you think about refinancing, when you think about this type of equity-based things that are basically happening, one of the things that you need to know is that you're creating risk, okay? You're creating risk for yourself. And what I mean by that is you're borrowing on your home. When you borrow on your home for whatever purpose, you're getting a second loan or third loan, you're getting incremental liens on your property. And for whatever reason, if you experience some type of a downturn, right? You lose your job, you lose, some adverse circumstance basically happens, right? Is they can come after your property, right? And that's why leverage is, risky in itself, but that's kind of like the fundamental premise within a cash out refinance. Now, the next question that is typically asked is, when does it make sense to refinance? Okay, so it generally makes sense to refinance when you have at least a 1% difference between your existing loan versus what your new loan is going to be. Okay, so if you're going from a 3.5% loan, then if you have a 2.5% loan on your refinancing, it absolutely makes sense to do so. Definitely keep into account like closing costs and things like that, but it is an absolutely good option at that when you have that level of a disparity, a whole 1% or more disparity between your interest rates. Now, I know it can even make sense to do it at 0.5%. Okay, it can make a lot of sense to do it at 0.5% interest rate differential, i.e. going from a 3.5% to a 3% and so on. But there you just got to be careful, right? In terms of what is your closing cost going to be, right? What are the actual terms of the loan, right? And if it absolutely makes sense, You need to do a little bit of math there, right? And figure out what your payback is going to be. But when you do all of that math associated with it, it could make sense to even do it at a 0.5% interest rate decline. So the third question we wanted to address in this video is, why should you refinance now? So as I mentioned at the start of this video, right, mortgage rates are at all-time lows. I recently refinanced at 2.375 for a 15-year loan. And you know, the fact of the matter is, at least based on what the Fed chair has said, Jerome Powell has said, is that he expects to keep this rates fairly low for the foreseeable future. There are certain macro factors, right, like the health crisis the countries, the world is dealing with, right? And due to that, they want to keep borrowing fairly low. Interest rates on borrowing fairly low. And they want to have more and more investing and contributing towards the economy, right? So that's the main reason why they're doing this. But, you know, I don't think people foresee this level of interest rate decline to be something to go on, you know, in the foreseeable future. I know Jerome Powell has said that we'll keep the interest rates low till 2023, but there's a lot of optimism that's happening in the marketplace as well, right? So you're, you know, with the new coming president into the U.S. White House, there is a fair bit of optimism there. There's a fair bit of optimism around vaccines, and which is also going to create more demand for mortgages. So therefore, we can expect to see these mortgage rates sort of creeping up. It makes a lot of sense to do a refinance now. The fourth question, right, is how do you go about doing a refinance, right? So as I mentioned earlier, I actually went through a refinance myself. And when I went through it, I went through an online lender. What I'm based on the research that I'm doing is these online lenders who have basically no physical presence are the ones who are offering the lowest rates. Okay, so they don't have any overhead to deal with. So the company that I went through, and I don't have any affiliation with them, is aimloan.com. Okay, so they were the ones who provided me with a very, very low rate. Now I've heard of loandepot.com. I mean, I've heard that they provide a significantly low rate as well. So, you know, it's a matter of you going out there and doing some research associated with it. But at a minimum, check out those two purveyors or lenders, largely because based on the research I've done, it doesn't seem to get much better than those two. Now, when you go about doing your refinance, it's a trying process, okay? So what a refinance really is, right? I mean, it's taking a new loan, okay? You're taking a new loan. So if you recall back to when you bought your place, right? When you bought your place, you had to get a loan then. And there was all this paperwork that you needed to submit, right? So you need to submit, maybe not as much, but quite a bit of paperwork now in order to get your refinance, because it is like basically you're entering into a new loan. So I've outlined over here, right, some of the requirements from a paperwork perspective in terms of what you'll need to submit, right? So it's your usual stuff like your mortgage application, your loan application, right? Pay stubs, bank statements, W-2s. All of this documentation is needed such that you can basically support the fact that you can engage in this new loan. Now, once you've submitted all of that paperwork, right, to these various assistants that work for the lending company, your loan basically goes into an underwriter, okay? The underwriter is basically the individual that makes the final determination on whether they should approve you to actually get the refinancing done, right? And then you can move to closing. Now, there is so much demand for refinancing in the shooting of this video. It is taking forever. Right? It is taking forever to go from that phase where you submit your documentation and have all of that complete, right, to when your closing will actually be scheduled. I'm talking about 60 days, 75 days, 90 days. It's taking absolutely forever. And the reason for that is pretty obvious, right? It's the low rates. And these low rates are not just prevalent as it relates to refis. These low rates are also related to if you're buying a home, like you're a first-time home buyer or a second-time home buyer, so a brand new home that you're looking to buy, they're all falling in the same queue, okay? So just be prepared for that. I know that was not something that I was fully ready for in terms of how long it's going to take from when I submitted my documentation to get to the next step, and it required a lot of emails and follow-ups and things like that. But I don't think that walking into the equation, it's like, oh, I'm just going to go ahead and do a refi and reach that to lenders and we can go from there. But no, it does take time. And also a lot of the documentation that you do need to submit, it has to be like wet signatures, so you have to print stuff out and submit that. So, you know, it is a pretty taxing process. The last thing I wanted to talk about is selecting the right loan, okay? Selecting the right refi loan. So you're going to get lots of options, right? There are lots of terms you're going to get. You're going to get 10-year, 15-year, 20-year, 25-year, 30-year. You're going to get a lot of these refi options similar to what you had when you were getting your original loan or your primary loan. And each of those duration, 10-year, 15-year, 20-year, whatever, they all have a slightly different interest rate, right? So generally speaking, the longer the term, you will have a lower interest rate, right? So if you have a 30-year term, it's going to have a lower interest rate than, say, for example, a 15-year term, right? Like for myself as an example, right? A 15-year loan was 2.375, a 30-year loan was 2.25, right? So it was a small difference, but a difference nevertheless. So it's something that you need to keep in mind as you go through the process, and you need to be relatively careful on. And the reason I say that is you don't want to necessarily do things that's going to keep you in debt for a longer period of time, because even though the interest rate is lower, right, you're paying interest for a longer duration. So for example, right, if you originally had a 30-year loan and you've paid 10 years off of it, right, so now you've got 20 years open on this loan. Now when you're going through your refi, you may consider doing a 30-year refi just because the rate differential is so low. Now when you're doing that, you just got to be careful, right? Because how much more interest are you going to be paying? Because you may end up paying a lot more interest than what you had on your original loan, and at that point it makes absolutely no sense to go through a refi. So I know I've talked about the easy loans, right? The 10-year, 15-year, 20-year, all these term loans, but there's also other more exotic loans out there as well, okay? So you have your ARMs, your adjustable rate mortgages, which is 5-year, 7-year term, 3-year adjustable rate. What that means is after 3 years or 5 years or 7 years, depending on whichever loan, exotic loan that you take, your interest rates are going to reset. They will reset to whatever the rate is in the market at that point in time, okay? And considering the environment that we are in now, it makes no sense to do an ARM, an adjustable rate mortgage, because for 3 years from now, 5 years from now, 7 years from now, the odds are definitely in the favor of interest rates going up and not down. Okay, so I mean, as I mentioned, we're at historically low rates at this point in time. When you go into a refi, definitely refi down based on how much your term duration is, and go with a fixed rate loan. So that's it. So that's what I wanted to cover off on this video in terms of how do you go about doing a refi and what the objectives of a refi are, what is the type of paperwork you need to submit when you're going through this process, obviously what the different types of refi are. I hope you found this video to be informative and educational. I'm always curious to know what your thoughts are as it relates to refi as well, right? Is it a good time to do it now? Do you have a different point of view or opinion that perhaps people can wait a bit longer? But definitely share those in the comments below. If you find this video to be useful, definitely hit the like button as well and subscribe to the channel. Thank you, and I will see you soon.